Today, we're going to learn more about the stress test the government is using to identify banks and other financial institutions at risk of failing. CBS News correspondent Priya David is at the New York Stock Exchange with more on that. Good morning, Priya.
Harry, good morning to you. The markets may have already factored in some of the news about the stress test, but there's a lot we'll be learning when more comes out later today. The Obama administration has said these tests will help it determine which banks are failing, which need more money, and which are healthy.
As the banks anticipate the impact of the financial stress tests, investors await the results.
The good news about the stress test is already in the market. What's not in the market is the bad news.
Amid the uncertainty whether some financial institutions can weather the storm should the economy worsen.
Some of the banks, I think, are going to have a hard time digging out of the hole that they've dug themselves into.
That hole could deepen if the unemployment rate rises into the double digits and should home prices continue to fall. According to some analysts, that scenario could hurt smaller regional banks susceptible to further loan losses.
So what a lot of investors and analysts have looked at are some of these regional banks out there that are in the test that have very low capital levels.
Banks with higher levels of capital, such as Wells Fargo, JP Morgan, and Goldman Sachs, are expected to pass.
Now, banks that are deemed to need more capital will have 6 months to try and raise that money in the private markets. Before I go, a quick word about the beleaguered auto industry. The smallest of the big three U.S. automakers, Chrysler, is preparing to possibly file for Chapter 11 bankruptcy, and that filing could come as early as next week. Maggie.
Priya David, thank you very much. Joining us right now, Senate Banking Committee Chairman Senator Chris Dodd. He is on Capitol Hill this morning. Good morning, Senator Dodd.
Good morning, Maggie.
Priya just mentioned it, and it is the headline in all the papers this morning. Chrysler possibly filing for bankruptcy as early as next week, and GM possibly following soon thereafter. So, Senator, we're looking at two of the big three automakers possibly filing for bankruptcy. Is this the new reality for the once mighty auto industry? And if so, Senator, what message does that send to consumers?
Well, obviously, this is not the option we'd like to be hearing about. My hope is it's not a liquidation, but rather what they call a debtor in possession sort of Chapter 11 filing, which would allow for the reorganization of these companies.
Which is more likely?
I think probably the latter one. I can't imagine they'd talk about liquidation here. It talks about reorganization. And while no one likes that option at all, I can't imagine people would, it may be the best option here to retain a strong auto industry in the 21st century for our nation. So I wish we had different results, but the realities are what they are. And so this may be the best option, even though we would have preferred a different one had things changed earlier. So I'd like to see how this is going to work. My hope is, I said to you, it's not a liquidation. I think that would be the wrong step, but rather one that allows for reorganization.
Senator, yesterday President Obama says that he wants legislation to stop credit card abuses. This is something that you have been pushing for years, and I don't have to tell you that there's been a strong credit card lobby against this. Yeah. Now that the president's on board, can you assure consumers that this will finally get done, and when?
Well, I'd love to give that assurance, but this is the United States Congress with 535 people, and anyone who predicts with absolute certainty what this institution will do hasn't been here very long.
But what's the likelihood?
I think pretty good, and you've laid the groundwork for it because people are irate over these issues. We've had 70 million accounts had interest rates go up in the last year alone, Maggie. That's 1 out of 4 families. Among students alone, the average credit card debt of a student in college today is in excess of $3,000. That's up over $1,000 just in the last 2 years. It's the largest debt that Sallie Mae, the organization that tracks these accounts, has ever seen among student debt. In fact, a graduate today has in excess of $4,000 worth of debt. Retail stores, interchange fees. The credit card issuers are making billions of dollars off fees they charge small retail stores in the country. So from a consumer standpoint, with fees and interest rates, students as well as small businesses, I think we have a wonderful opportunity now to make a difference here and get a handle on these issues that have been gouging consumers for far too long.
Senator Chris Dodd, we have to leave it there. We thank you for your time this morning.
Thank you, Maggie.